What if I told you a seismic shift of wealth is about to take place next year, and your actions in the next few weeks will determine which side of that divide you land on? In today's video, I will show you two specific companies poised to capture that wealth. But more importantly, I'll expose the economic trap being set for anyone who isn't prepared. Treasury officials have publicly framed 2025 as the setup. They are openly stating that 2026 is for the harvest. A brutal truth is that a small percentage of people are about to make fortunes, while a vast majority will see their financial security eroded. We are in the final stretch to position ourselves correctly for what comes next. This analysis will break down the current market signals, the historical context for what's coming, and most crucially, provide you with two actionable equity ideas I believe are set for significant growth in the first quarter of 2026. I'll make my case for each, but the final judgment, as always, is yours, because it's your capital on the line. Do your own research on any idea presented here. Timestamps are below. Let's begin. First, we need context. The market is broadcasting clear messages as 2025 concludes. We are at record highs. The S&P is up 18% this year. The Nasdaq has gained 22%. The Dow is over 14% higher. This marks a third straight year of double-digit returns. Recent economic reports are strong. Yet many people look at their own lives and feel disconnect. Prices feel high, financial stress is common, and consumer confidence readings are low. Your personal experience might tell you the official data is a lie. And for the average person, it essentially is. The system is not designed for their benefit a reality about to intensify in 2026. If you don't grasp the next concept, you risk being financially sidelined. Our modern financial framework has been engineered to transfer the pain of any potential economic crash away from assets and onto currency itself. When weakness appears, policymakers don't allow prolonged asset crashes. Instead, they flood the system with new money, effectively sacrificing the purchasing power of cash to protect investment portfolios. This is the core mechanism of the great wealth transfer, protecting assets by eroding the value of labor and savings. This dynamic enriches asset holders and impoverishes everyone else. Look at the evidence as 2025 ends. Silver has soared 167% to all-time highs. Gold is up 71%. Meanwhile, the U.S. dollar index has fallen nearly 10%, its worst year since 2017. It now takes more devalued dollars to buy the same goods. This is the debasement trade, and Wall Street is betting heavily it continues. A weakening dollar lifts the price of everything denominated in it: food, energy, housing, and stocks. This process isn't instantaneous. It can take 12 to 24 months to fully circulate. But during that window, massive wealth can be created. Some ask, what if the economy truly breaks? The response would simply be to print money faster and in greater quantities. This is why fears of a prolonged, devastating market crash are often misguided. The crash doesn't disappear. It's transferred from your brokerage statement to your grocery bill. The entire structure, from tax policy to inflation response, is calibrated to benefit capital, not labor. We are living in a pronounced K-shaped economy. The upward line represents asset owners, the tech sector, and those connected to AI. The descending line includes traditional workers, those reliant solely on wages, and industries being automated. This divergence will only accelerate as AI adoption grows. Heading into the new year, understand this doesn't imply a smooth ride straight up. Volatility will be extreme. We face major catalysts, like upcoming Supreme Court rulings on tariffs, which could swing markets wildly based on the outcome. But for those who understand the bigger picture, this volatility isn't a threat. It's the source of the opportunity. Remember the speed of the recovery in April 2025? Or the V-shaped rebound in 2020? Liquidity provided the rocket fuel. The next significant dip, should it come, will likely meet the same aggressive policy response. The goal is to think in these broader terms. Building positions in quality assets during fear or trading the volatility requires a plan. Without one, you become the opportunity for others. So, what should we be looking at? First, a tactical trade on a hot commodity, then 2 strategic stock ideas. Let's start with silver, ticker SLV. Its meteoric rise is driven by several powerful forces. First, AI infrastructure is a massive new consumer. Every server rack and advanced chip requires silver for its unparalleled conductivity. Second, China, controlling a dominant share of global supply, is imposing strict export licenses starting January 2026, hoarding silver for its own solar and EV industries. Third, we've been in a structural supply deficit for years, using far more than we mine. Fourth, silver is a key component in electric vehicles, using multiples more than traditional cars, with next-generation batteries potentially needing far more. Finally, silver was historically extremely cheap relative to gold, and it's been playing a fierce game of catch-up amid a falling dollar. My outlook for SLV involves momentum into early January, a likely consolidation, and then a resumption of the trend. I see a push toward the $85 area on continued headlines, followed by a probable profit-taking pullback to find support near $70. This would shake out weak hands and cool overbought conditions. Later in January, I expect a firming around $75 as a new base, setting the stage for a move toward $90 by February, driven by ongoing supply anxiety and currency dynamics. We would then reassess in Q1. In our Wisdom Circle community, we identified a specific option strategy on SLV to capitalize on this anticipated move over the coming months, using a longer-dated expiration to manage time decay. Now for the main focus. 2 buy and hold stocks with massive Q1 2026 potential. Stock number 2, Nebus, ticker NBUS. Think of Nebus as the landlord for AI compute power. They build and operate specialized data centers packed with high-performance GPUs and rent that capacity to companies developing AI models. They occupy the crucial middle ground between chipmakers like NVIDIA and end users like OpenAI. Their value proposition is time and efficiency. A startup can access world-class computing instantly, bypassing the immense cost and delay of building their own infrastructure. They differentiate from generic cloud providers by designing their own hardware and cooling systems for peak AI workload efficiency, reportedly cutting costs by 20%. 2 landmark deals validate their model: a major agreement to supply Microsoft and a staggering $3 billion 5-year contract with Meta. These deals provide guaranteed long-term revenue, prove scalability to the most demanding clients, and secured financing for rapid expansion. Reasons for optimism include validation from tech titans, a strategic investment partnership with NVIDIA itself, market leadership in Europe, where specialized cloud demand is exploding, and positioning ahead of the AI demand curve. This is a company building the foundational infrastructure for the next phase of the boom. Stock number 1, Zeta Global, ticker Zeta. Zeta is a marketing software company that uses AI to help large enterprises identify and reach their best customers. Its platform consolidates a company's marketing channels: email, social, advertising into one system, powered by AI that analyzes customer data to predict behavior. The crown jewel is Zeta's proprietary data asset. They own deep profile information on hundreds of millions of consumers globally, with thousands of data points per person. In an era of tightening privacy laws, this self-built, permissioned data moat is nearly impossible to replicate. They serve 40% of the Fortune 100, including names like American Express and Marriott. An independent study found clients average a 6x return on ad spend using Zeta's platform. The business is firing on all cylinders. They've exceeded earnings expectations for 17 consecutive quarters, are generating strong and growing free cash flow, and their AI is natively built into the product, not added as an afterthought. In the new economy, data is the currency, and AI is the engine that multiplies its value. For 2026, I see Zeta as a play on enterprises desperately seeking efficiency and ROI in their marketing spend, leveraging a unique data asset that competitors cannot match. That concludes our analysis. The goal is to provide you with a framework and specific ideas to research. If this deep dive delivered value, please support the channel by liking this video and subscribing to Winds of Thought. For our community members, detailed price targets and specific option ideas on these two stocks are available now. If you're interested in that level of analysis, check the link in the description. We appreciate you. Make it a great day, and I'll see you in the next video.